A lot of investors have been burned investing in EV stocks, Lucid and Rivian. They're both down more than 3/4 from their all-time highs. If you bought a little bit earlier this year, you might be making a little bit of money. Both have actually come up. But the bigger question for both of these two companies is, what does their future look like? And is there a chance that we might actually see these companies become takeout targets, acquisitions by other companies in the space? I'm Jason Hall. This is The Smattering. I got Tyler Crow here with me to talk about this potential outcome for these two big EV stocks. Hey, Tyler.
Jason, we've already talked about this once on the long form podcast about the possibility of EVs being takeover targets or startup EV being takeover targets.
That's true. Find the Smattering podcast wherever you get your podcasts and look for the Reckless Predictions episode. And we talked about this exact same thing. So that's been 2 months or so ago, about 3 months now, Tyler. Podcast. Heck yeah, absolutely. Subtle too. I'm the king of subtle. So Tyler, here's the question. So 3 months have passed. Where do you stand on it with these companies? How likely of an outcome is it? And is there anything that's even investable about it?
I went on the record, saying that I thought that companies like Lucid, like Rivian, and some of the even smaller ones are potential targets for the most, largely because they are falling. And if you start to look at how difficult automotive is to begin with, there was a very good chance that these companies could be folded into some larger operations over time. The idea that maybe not everyone is going to be super jazzed to buy a Buick electronic vehicle, for example, or Ford has been trying to brand its EVs as Mustangs versus, you're not getting the Ford Fiesta EV sort of thing, right? It's trying to make some sort of premium label to it, and the idea being that with Rivian
and even with the Mach-E, right? So the Mustang Mach-E, and then with the pickup, the F-150 Lightning. So doing things to be differentiated.
Trying to take
brand, right? And I think that's important because we're talking about the concern that so many automakers might be dealing with brand fatigue.
Exactly, and that's there might be some value in the idea of wholly new brands being launched in the EV space. I know, for example, Volvo, the company Volvo, launched a wholly separate brand, Polestar, for much of their EV fleet under this very idea. Like, nobody's going to go out and buy a Volvo station wagon EV. That's the same Volvo it's been for 40 years. But if you can kind of wrap it in a new package, being Polestar, makes it slightly more appetizing, even though there is no brand recognition, brand loyalty to this new idea. And I think there is a potential for these two companies that, have some word of mouth, hey, these are interesting, right? Like, they're obviously not Tesla, but there's something to be said about these brands coming up. But to me, this is where the challenge is they're brands. And if you look behind the curtains at the operations, they don't really have, a lot of assets, a lot of the, the hard, tangible things that you would want from an operational standpoint to, I think, justify a big company coming and taking them out right now. I know that there was some whispers on Lucid and the Saudi Arabia fund, and we saw a pretty significant stock.
It's already its largest investor, I believe.
Right,
one of its largest investors.
But that's a little bit tough to swallow. And there were some connections between Ford and Rivian early on because Ford was an early adopter or an initial investor in the company. But I think if I were an executive of an automotive company, I would almost evaluate it purely on its brand, because if I'm going to be bringing in a Lucid or a Rivian or something like that, I'm not going to be making it on their lines. I'm going to be making it on my lines. I'm not going to be doing a lot of their, back end stuff. Probably it's going to be brought in and done the way that we've been making vehicles for a long time. And
right? Because if you are a Ford or a Volkswagen or Toyota or one of these established automakers, the one thing that you figured out is how to mass produce vehicles and make sure you have suppliers lined up to provide you with everything you need and do it across the economic cycles.
For all the things that automotives may not be necessarily good at, that's the one thing they are very good at. And that is where a lot of these a lot of these EV startups these days are falling short on, is that ability to mass produce and scale up quickly and in a cost-effective way. So all of that said, I could see it happening. However, from an investor standpoint, I certainly don't want to be buying these stocks today on that takeout idea, because I think it would likely take a significant decline still in their stock prices and their valuations as businesses for that to actually happen.
Yeah, I think that's a fair takeaway. And just to build on that briefly, Rivian, for example, about a $19.5 billion market cap. As of the time we're filming this, has $13.3 billion in cash, right? So you back the cash out and you're looking at about a $6 billion, you'd be paying at today's price about $6 billion to buy the business net of cash. And of course, you're assuming, all of the other liabilities and that kind of thing. Then you compare that to Lucid, trades for a similar market cap, has $3 billion in cash. So you'd be paying a lot more for the intellectual property and the hard assets outside of cash. And I think you're right. I think these companies, they're kind of would be in the driver's seat for an acquisition because they have enough money to fund their operations for extended periods of time. And they're starting to get some traction with consumers, and they're starting to scale up some commercialization. I wouldn't expect to see any of the major automakers want to make an acquisition of these unless they saw strong brand appeal, but weak operations that gave them some leverage to negotiate to get a more attractive terms than the valuations that they'd be paying if they just were trying to buy the brand today.